everyone, welcome back to our Accounting 210. In this video, we continue with our chapter 2, building blocks of manager accounting. And then as I promised you, right, finally we will start doing numbers. So hopefully you can feel a little bit better after watching this TV and after watching this video and do some practice with me. So let's go to the part that we stopped last time. We talked about product cost and we talk about period cost. We said for service company, there is no product cost, right? We said service company, no product cost because everything is just the period cost. For the merchandising company, they have three different parts of the product cost. And then for manufacturing company, they also have three parts of the product cost: direct labor, direct material, and then manufacturing overhead. So let's do some practice together. We are going to learning objective 5, prepare financial statement for service, merchandising, and then manufacturing company. So let's get started. The first one is a service company income statement. Service company income statement is the easiest one. This is just straightforward because when we talk about income statement, the main thing is, let's see, let me put this. Sorry about that. So when we talk about the income statement, general idea is, remember, how do you get your income statement? It's always your revenue. It's basically, I put it here, right? It's already shown here. It's your revenue minus, oh, this one doesn't. So it's your revenue, I put it here, revenue minus cost of goods sold gives you gross margin, and then minus your operating expense. Gives you operating income. So for service company, we said what? For service company, they don't have inventory. So if they don't have inventory, they will have no cost of goods sold, right? They don't have cost of goods sold. So we don't even have this part. We don't have product cost. We don't have inventory. We don't have cost of goods sold. So what you will say is revenue, subtract all the operating expense. So we go to this operating expense directly, and then you have all this operating expense. You get your total operating expense. You get your operating income. So that's why I say it's straightforward. You just use your revenue minus all the operating expense. There is no cost of goods sold. There is no inventory for service company. You like it? I know you like it, right? Next one, we talk about our merchandising company. So what's the example of merchandising company? Think about this, right? It's Walmart, it's Target, it's straightforward. We said merchandising company, they have the product cost, but the product cost is from purchasing their inventory from the manufacturer. I use the cereal as an example, because I haven't even started having my breakfast and I'm just think about what I should eat. I decided to eating the cereal. So let's think about cereal. How do you find out the cost of goods sold? So we also put it here. It's your revenue minus cost of goods sold gives you gross margin minus all the operating expense gives you operating income, right? Gives you operating income. So how do we find the cost of goods sold? We need to find our cost of goods sold. So we will get our gross margin. What's the meaning of cost of goods sold? Cost of goods sold is the cost of the goods that is sold. That's why we call it the cost of goods sold. Let me ask you a question. I want to sell cereal, the box of cereal, okay? You know, oh, let me just use one easy one. I sell eggs. I sell the chicken eggs. So I use chicken eggs. At the beginning of my day, okay, so today is, you can even see the time is it's May 30th. So I'm thinking about, so today at the beginning, I opened my refrigerator. I put it beginning inventory. I should know this. For my inventory, beginning inventory, I had 3 eggs sitting in my refrigerator. So I said, that's not enough, right? That's not enough. And then I purchased 5 eggs from the farm. Okay, I purchased 5 eggs from the farm. And at the end of the day, I opened my refrigerator. I found out that there are only 4 eggs sitting in my refrigerator as the ending inventory. Tell me the simple math. At the beginning, I had 3 eggs, and then I purchased 5 eggs. So, hey, this number is not right. This number is not a good number. So, sorry, I changed at the end. I change it as at the end. I just got 2 eggs. Okay, at the end I found out in the refrigerator still have 2 eggs. Sorry about that. So at the beginning, I had 3 eggs, I purchased 5 eggs. What is the maximum number I can sell? So totally available for sale is how many numbers? Available for sale, I totally had 8 eggs available for sale, right? That's the maximum number. Someone wants to say, hey, can I buy 9 eggs? I cannot do that because I only have 8 eggs. So totally, I had 8 eggs available for sale. At the end of the day, I opened my refrigerator. I only had 2 eggs left. You tell me how many eggs I sold. My cost of goods sold is how many eggs? You tell me. How many eggs I sold? I had 8 total to sell. At the end, I only had 2 left. How many eggs I sold? I sold 6 eggs. That's 8. How do I get 6 eggs? My beginning inventory is 2. I purchased how many? Is 3. I purchased how many? 5. My available for sale is 8. And then my ending inventory, how many I didn't sell? I still had 2, right? So my cost of goods sold should be 6. My cost of goods sold should be 6. That you got it. You got this part. Okay, I'm so happy for you. You got this logic. You got this part. Beginning inventory plus the purchase gives you the available to sale minus your ending inventory. Why we call it ending inventory? Because we didn't sell. We haven't sold them. Okay, so minus our ending inventory become our cost of goods sold. You beginning had 3 eggs, you purchased 5, you totally had 8. Those 8 eggs, either they will stay in your refrigerator as your ending inventory. We said that there are still 2 sitting in the refrigerator, or they will become cost of goods sold, which is 6 eggs. That's 8. That's how do you get cost of goods sold. So got so excited. I'm so excited. So now you can find out that you use your sales revenue, you minus cost of goods sold, you get your gross profit or gross margin, we minus all the operating expense, you get your operating income. Okay, so next slide basically telling you how do you get your cost of goods sold. We already talked about that. It's your beginning inventory plus your purchase. So that gives you available to sale, right? Available to sale. Remember, you had the 3 eggs plus the 5 eggs. You totally can sell 8 eggs. The 8 eggs has 2 parts. Either they will not be sold, so they will become your ending inventory, or they will be sold and become cost of goods sold. So your beginning plus your purchase gives you cost of goods available for sale. It's available for sale. and then you can totally sell 119,500, but you still had the ending inventory. The ending inventory is you didn't sell. So your cost of goods sold will be the difference. You get your cost of goods sold here. Remember, you got your cost of goods sold here, 106,500. And then you put this 106,500. Remember 106,500? You got it from the next slide. You get this number from the next slide. You get the 106,500 from the next slide. Beginning plus purchase available for sale minus ending gives you cost of goods sold. Very excited, very happy for you, okay? And then I save the next one for the manufacturing to the next video. I would stop here, give you a break, and then we talk about manufacturing financial statement. It takes many steps. We have one step, we have two steps, and then we get our income statement in the third step. Okay, we are almost there. Don't cry. Well, I know chapter 2 is a lot of work. You are doing a wonderful job so far. Hey, hang on there. Don't cry. I'll see you next time. Thank you.